morning, everybody. Welcome to the Trading Market Technicals Morning Call video for Friday, October the 12th. Well, we had our typical gap and crap, so to speak. We gapped higher early on in the morning, first thing at the opening, and we did drift a little higher for a good maybe half hour, 40 minutes, and that really called the market top, and we just started fading away, started drifting lower into lunchtime. We had our consolidation, and of course, our last push lower and into the close. So we really filled the gap from Thursday. So we've had another really down day. I think the markets really didn't do much towards the end of the day, but nonetheless, we markets could not hold any gains going into Thursday. So Friday is going to be different. And what happens usually on Friday is that we might have a continuation pattern coming from yesterday's close. Markets were very quiet last night in the overnight session. Currency markets have been extremely quiet, but that tells me that there's a larger move to come, which currency markets start to wake up, so does our markets, our equity markets. So that being said, I want to run right into the charts. I don't want to waste any time. So really, there's no change other than the fact that we filled the gap on Thursday. We filled yesterday's gap, actually, excuse me. So I would suspect that we open down a little bit, and then markets usually on a Friday, they have a lower volume Fridays, will generally just kind of grind into the close and drift higher. So the best time to do any type of trading would be obviously between 9:30 and about 11:30, 12 o'clock. Now, that could actually change with some sort of a catalyst or some sort of news coming out of Europe. So that's always something that we have to be on our toes with. But the markets are changing. I'm not sure if you noticed that. Yes, it's been a quiet week, so to speak, but the markets are changing. And I could see that via the currency markets, the commodity markets, and our equity markets. So pay attention, because I think in the next couple of weeks, going into next week, we might have a good little push to the downside, but then I think the markets will be bought up going into the end of the year. So that being said, I want to start out with our bonds. I want to look at our TLT, and this is really interesting. As you can see, we're in this downtrend channel, and every time the markets take a little hiccup, the bonds start to move a little higher. But we're right on this 50-day moving average. If you take this out, you see what I'm saying. We're at the 50-day moving average in bonds, and we had a nice big move for 3 days. As you know, our equity markets had moved lower for the last 3 or 4 days, and we're at resistance. So what that kind of tells me, and I'll show you some, I want to show you the Dow chart. You'll see that that being at resistance, either one or two things. Either something's going to have to happen and break out, the bonds are going to have to start really breaking out higher, or equities are going to find a small little bid here, and we're going to bounce. So that's why I'm thinking maybe today we maybe pop out of this early on, maybe continue a little sell-off, and then start to really fade the bonds where equities catches a bid, and you'll see what I'm talking about here. And as you can see here, here's the diamonds, which is the Dow Jones Industrial ETF. We're in this long-term trend channel here. This is a daily chart. And you can see we're at our 50-day moving average here in our bonds, which coincides nicely with our lower trend line. So bonds being at resistance, equities being here at support, it would favor, okay, maybe an overshoot here a little bit, and then a pull back in there. So that's what I'm looking for today. I want to see how the market's open. Now we're up about 2 handles in the mini, so really no change from yesterday, from the overnight session. Take a quick look here at the spiders. Now here's interesting, right? We had said, guys, look, it looks like a head and shoulders, but does it look like it could be a symmetrical triangle? And sure enough, we broke out and failed, right? So if we take that out and we say, wait a minute, this could also be a double top as well. So there's multitude of patterns here, but this is the one I'm really looking at, is this head and shoulders pattern. I want to just take this away. If we break this area here, and you'll see again, we're at support again at the 50-day moving average. So I said I wouldn't get too really crazy looking to start shorting the market right away. I'd like to see this market bounce, retrace half of this move from this week, maybe back to the 20, fail, and then if we break the 50, then I would virtually say that our target would be somewhere in the 200-day moving average, and that's where we would have that nice little sell-off, another 4 or 5%, and then the markets would probably be bought into the holiday season. So this is where a turning point is in the markets here. It's either one of two things. Either we're at support right now, so the markets bounce today, okay, at one point during the day, maybe a small sell-off in the morning, and then a bounce. And then what happens next week is that there's some sort of a catalyst come out, and markets get spooked again, and then they sell it. They break the 50-day moving average. If we break that 50-day moving average, you'll see this long-term trend line I had here, and you see our volume profiles were really, really weak right in there. We got this little thin zone, and if we go all the way down to this thin zone, what happens? We meet our 200-day moving average. By next week, that would be right up in this area. So this is going to be my target. If we break this 50, my target would be 137.45, and that would coincide nicely next week as the moving averages move up, would be that 200-day. And if you could see here, look at the volume profile. So that's what I'm looking for. I'm either looking for a dead cat bounce to get short, or markets, if this dead cat bounce, meaning low volume, stalls and creates a lower high, then I'm going to start looking to short the market aggressively. If in fact we hold here at the 50-day moving average and we do get a good volume, I see some volume bars coming in and some accumulation and money running back into the risk assets like technology, which I'll show you, then maybe we could take a good run to the high and maybe even go higher into the end of the year. But I just don't think that this is our little pullback that we're looking for, and everything's just fine and the markets go higher again. Earnings season has been out, and a lot. There's been several key drivers here. A lot of some of these larger cap companies are actually not reporting well, and they're guiding much lower. So that is not a good sign going into earnings season, which next week will be full blown into earnings season. So that's going to be a good driver for if we're going to roll back over and sell off. Are they going to take profits? And then they would look to probably bid the market up. So that's going to somewhat what I want to just leave you with that thought for over the weekend. Spiders 15-minute chart, as you can see here, again holding this line here, 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 and here. This is a big line, 143.35. Call it 143, rounded off. 143 is going to be a really big area, and this is something that we want to see. And if what happens, low volume thin zones, this is going to be really interesting to see, because again, if this thing breaks down there, this will project our target with our daily chart or our S&P. Okay, FTSE, FXE, Euro, ETF. Nice bear flag, broke out of the bear flag, bounced back up here, and then we're just down below this bear flag. Keep an eye on this because, guys, 127.62 is on the ETF. But if you're looking at the euro dollar itself, the pair, 128 is going to be a very big area. If we lose 128, you're going to see at least a 200 pip drop in the euro. So watch the euro. Euro obviously is going to be a key driver as well in our markets. Now, IYT to transports. Transports really need to start getting going. Seasonality here, guys, is what we're going to be looking for. Seasonality, the transports start to really gain momentum, of course, because of the holidays, a lot of the truckers. So maybe another back test of this upper trend line here, this wedge, and then the market starts to move. But again, remember, we have 20, 50, and 200. So we want to see this start to really pick up, as well as our Russell. As you can see, Russell had the 50-day moving average, did a little better. I'll tell you, Russell really was had just a total reversal day, was making new highs for the day anyway, and then just really rolled over in the afternoon, and they really took profits. So watch here with the Russell head and shoulders pattern here. This is no denying it. I like this head and shoulders pattern, to call it that. So that 50 loses. We lose the 50. We're going to come right to the 200, and look at where the 200 coincides with. Volume profiles again. If you're not using it, please use the volume profiles. It really gives you your thin zone areas. Semis, just getting smashed. I mean, money is totally coming out of the semiconductor sector. And as you can see here, again, now this thing has to start. We have to start. I want to start seeing the semiconductors really start to take shape here, because this is not a good sign. So we want to really start seeing the semis, the transports really start to pick up momentum here. And take a look at Apple. Head and shoulders on the Apple, and look at this trend line right here, literally right to the penny. And now we had a large engulfing candle, not good. So, therefore, where do we go with Apple, right? Because Apple's heavily weighted in S&P and the Qs. So this is going to be a big factor here. Well, this Apple, if we could get back down here, maybe test the lows and then start to roll back up again, then I think we'll have at least a good shot at that 20-day moving average. But now Apple's below the 20, below the 50, and clinging to this long-term trend line. If this long-term trend line is lost, you're going to have to say right up in here, 588 is going to be your target by next week, which that 200 will come up and we'll meet this little area, this heavy area of support. As you can see here, we have a lot of volume in here. So I think 588 will be the next target if we break this area down here. So today, tomorrow, Tuesday is going to be very, very interesting for Apple and the markets. Okay, weekly chart. Now today's Friday, of course, but I just want to show you a quick shot. I'll bring this back out on Monday. Nice big area here, big move lower, as you can see, following what the Q's doing. Distribution days. Distribution week, excuse me. This is the weekly chart. So just want to give you a quick snapshot of this. But take a look at the Q's daily chart. Really ugly. I mean, technology just really falling to the waistline here. All right, so guys, look at this volume distribution every single day. Now it has been dropping a little bit, so maybe we get a little bit of a push here. We're coming into some support area here, but really thin area in here. So next support area would be this vertical line here, and that would kind of coincide that 65.45 just underneath that 200-day, which would kind of pull up. So interesting charts. Little chart segment here today. I want to just be careful today. Today is Friday. End the week on a good note. Make sure that you use your stops. Today will be interesting. If we maybe they dip them early, find some sort of a bottom, and then they rally up into the afternoon today. That's what I'm looking for. I'm not positioning myself for that. I'm letting the market tell me what to do. All right, guys, enjoy the weekend, and we will talk to you on Monday. Take care.